How to calculate the annual installment, that is total cost of the asset divided by total PV factor. Now we have to multiply it with the PV factor to get net cash outflow. We have to calculate present value under leasing option also, because we have to compare buying option and leasing option. Installment minus interest, so we'll get the principal amount. Hello everyone, I am Arshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Today we are in the 7th session of Unit 4, that is lease financing. So my dear students, in a previous session we have discussed a problem on lease financing and we have learned few theory concepts relating to lease financing. Let us quickly recall what we have discussed in a previous session. So in a previous session, as I've already told you, we have discussed a problem on lease financing. So in your examination, they have not asked a problem on lease financing. To be in the safer side, we shall solve at least 2 problems on lease financing. Now we shall go through a problem today. So A Limited is acquiring an asset consisting of rupees 5 lakh. Now A Limited wants to acquire an asset and the value of the asset or the cost of the asset is rupees 5 lakh. It has 2 options, that is A, to borrow the amount at 18% per annum. So it has 2 options. So we are going to solve problem on lease financing, where in the question they will give an option to buy the asset or to go for lease financing. So we have to calculate the total cost which is incurred in both the respect, that is in buying option as well as leasing option, and we have to compare both and we have to suggest the organization or the person to go for buying or leasing. Here they have given A Limited company, so they wanted to purchase an asset and the value of asset is rupees 5 lakhs. So they have given the cost of the asset, and next they have given there are 2 options to purchase this asset. That is to borrow the amount at 18% per annum and payable in 5 years. So they can purchase the asset by borrowing the amount. Now what is the rate of interest? So if they borrow the amount, that is 18% rate of interest. To take on lease, and the second option is what? To take on lease for 5 years. So the other option is that they can go for lease financing for 5 years where the rental value is rupees 1,20,000. If there is a lease agreement, of course for using the asset, they have to pay some amount which is known as lease rent. Now the lease rent they have given, that is 1,20,000. So this 1,20,000 has to be paid for 5 years. At the end of year, tax rate is 50%. Now, so in order to purchase or in order to lease assets, so they have to pay certain percentage of tax, that is 50% of tax in this problem, and depreciation is 20% per annum. So we have to calculate depreciation for the asset at 20% per annum on written down value method. Whereas in previous problem, we had solved a problem where the depreciation was calculated on straight line method. Here we have to calculate depreciation at 20% under written down value method. Salvage value is, that is rupees 1,18,000. So they have given salvage value, that is 1,18,000 at the end of 5th year. So what is the salvage value at the end of 5th year? That is 1,18,000. You are required to advise a company about lease or buy decision. So we have to give the suggestion for the company, that is A Limited, to go for lease financing or to buy an asset. So advise a company regarding the option it should go for. So we have to give a suggestion or give a advice whether they have to go for buying an asset or whether they have to lease the asset. Now here they have given few more information, that is they have given year 1, 2, 3, 4, 5 and they have given PV factor at 18%. So this PV factor will be used to calculate the total cost of the asset both in buying option as well as leasing option. So in the first year, the PV factor at 18% is 0.847. In the second year, it is 0.718. And the third is 0.609, and the fourth year it is 0.516, and the fifth year is 0.437. So I have already told you in the previous session, if they have not given the PV factor, then how to calculate the PV factor. So what is the formula? That is 1 divided by 1 plus R. So this is a formula to calculate the PV factor if they have not given in the question. Now we shall directly go through the solution. Hope you have understood the problem. Here they have given two options and we have to select the option. Select the best option. Now we shall go through the solution here. So the first step in order to calculate the cost under leasing option or buying option is what? That is calculation of depreciation. Now the percentage of depreciation is 20% and depreciation has to be calculated under written down value method. So they have given in the question. Now this is the year. So year 1, 2, 3, 4 and 5. So 1, 2, 3, 4, 5. So 5 years. Next, what is the cost of the asset? So they have given in the question. So what is the cost? That is 5 lakh. So in first year, the cost is 5 lakh. So we have to deduct depreciation in the first year. So less depreciation at 20%. It's nothing but what? 5 lakh into 20%. So 5 lakh into 20% will get 1 lakh as depreciation. Now deduct this. So 5 lakh is the total cost of the asset, less depreciation in the first year. So the amount is how much? 4 lakh. Now come to the second year. So second year value of the asset is 4 lakh, less depreciation. So how to calculate? So what is the amount? 4 lakh into 20%. So how much you'll get? That is 80,000. 4 lakh minus 80,000, that is 3,20,000. That is the value of asset in the second year. Now same value will be in the beginning of the third year. Now we have to deduct the depreciation. So what is the depreciation? 3,20,000 into 20%. That is how much? 64,000. So 3,20,000 minus 64,000. So the value is 2,56,000. Now same value, that is 2,56,000 in the beginning of fourth year. That is the value of asset in the fourth year, less depreciation. Now calculate on this amount. That is 2,56,000 into 20%. So we'll get 51,200. So when you deduct, you will get 2,04,800. Now the same value will be at the beginning of fifth year. That is the value of asset. That is 2,04,800 less depreciation. 2,04,800 into 20%. So we'll get 40,960. So deduct that depreciation. So the total amount or the total cost of the asset at the end of fifth year is 1,63,840. So this is how you are going to calculate depreciation under written down value method. So cost less depreciation, and on deducted amount we have to calculate the depreciation for the next year, because we are going to calculate depreciation on written down value method. So now we have calculated the depreciation. And the next step is what? Calculation of annual installment. Now, how to calculate the annual installment? That is total cost of the asset divided by total PV factor. So, we have to take total cost of the asset divided by total PV factor. Now, they have given PV factor of 18%. So, we have to add all these PV factor, then we'll get the total PV factor of 18%. So, how to calculate? So add all the PV factor, that is of first year is 0.847, second year is 0.718, third year is 0.609 and fourth year is 0.516 and the fifth year is 0.437. They have already given in the question. Add all this, you will get 3.127. Now apply the formula. Annual installment is equal to total cost of the asset divided by total PV factor. Now what is the cost of the asset? They have given, that is how much? 5 lakh. So 5 lakh divided by total PV factor is 3.127. So we'll get the annual installment is 1,59,898. So this is the total annual installment. Now we shall go through the next table, that is calculation of cash outflow. So we have to calculate cash outflow under buying option. So your first column is all about year. So how many years are there? 5 years. 1, 2, 3, 4 and 5. And the next one is loan amount outstanding. So since they are going to buy an asset by loan, so what they have to do? So we have to see what is the loan amount to be paid, because they are going to borrow the amount and buy the asset. Now, loan amount outstanding in the first year is 5 lakh. It's nothing but what? This is the cost of the asset, right? So, cost of the asset is 5 lakh. So, loan amount outstanding in the first year is 5 lakh. Now, calculate interest. So, how to calculate interest? So, what is the loan amount outstanding? 5 lakh into what is the rate of interest? It is 18%. So, when you calculate, you'll get 90,000. Now, we know installment, that is annual installment. We have already calculated, right? So, what is the annual installment? 1,59,898. So, write this amount in the installment column. Now, we don't know what is the principal. Now, how to calculate the principal? Installment minus interest. So, installment minus interest. So, we'll get the principal amount. Now, what is installment? 1,59,898 minus 90,000. So, the principal amount is 69,898. So, this is our first year. Now, come to the second year. So, what is the loan amount outstanding in the second year? That is here loan amount outstanding. Loan amount minus principal. So, we have to deduct it with principal amount. So, what is the loan amount in the first year? 5 lakh minus 69,898. So, the outstanding amount in the second year is 4,30,102. So, this is a loan amount outstanding. Now, calculate interest. So, interest on 4,30,102 into 18%. So, we'll get 77,418. Now, we know the installment, annual installment in the sense all year installment remains same. So, calculate the principal amount. Now, installment minus interest. So, we'll get the principal amount, that is 82,480. In the same way, calculate that of third year. So, how to calculate? So, we shall calculate that of third year. Now, we want loan amount outstanding. So, how to calculate? Loan amount minus principal. So, loan amount is 4,30,102 minus 82,480. So, the loan amount outstanding in the third year is 3,47,622. Now, we have to calculate the interest. So, interest is calculated how? That is 3,47,622 into 18%. So, we'll get the interest, that is 62,572. We know the installment amount, that is 1,59,898. Installment amount remains same. Minus this interest. So, we'll get the principal amount, that is 97,326. Now, if you come to the fourth year also, same way you have to calculate. Fourth year, what is the loan amount outstanding? 3,47,622 minus 97,326. So, we'll get loan amount outstanding is 2,50,296. Now, calculate the interest. So, how to calculate? 2,50,296 into 18%. So, we'll get 45,053. Now, how to calculate the principal amount? We know the installment 1,59,898 minus this interest. So, the principal amount is 1,14,845. So, this is our fourth year. Now, come to the fifth year. So, fifth year also. So, what is the loan amount outstanding? That is 2,50,296 minus 1,14,845. So, we'll get loan amount outstanding is 1,35,451. Now, calculate interest. 1,35,451 into 18%. So, when you calculate, you'll get 24,381. We know the installment amount 1,59,898 minus interest, that is 24,381. So, I'll get the principal amount 1,35,451. So, this is about calculation of cash outflow under buying option. Now, we shall go through one more table, that is calculation of cash outflow after tax. So, there is a tax, right, of 50%. So tax percentage is 50%. So we have to calculate calculation of cash outflow after tax. Now here, so there are 5 years, 1, 2, 3, 4 and 5. So we know the depreciation, we have already calculated. So what is the first year depreciation? That is 1 lakh. Second year is 80,000. Third year is 64,000. Fourth year is 51,200. Fifth year is 40,960. Write that amount. So 1 lakh, 80,000, 64,000, 51,200, 40,960. Now interest also, we know what is the interest. We have already calculated. 90,000, 77,418, 62,572, 45,053, next 24,381. So write all that interest amount. So we have already calculated. Next, total these two. That is depreciation plus interest. So if you add these two, that is 1 lakh plus 90,000, 1 lakh 90,000, 80,000 plus 77,418 will get 1 lakh 57,418. Next 64,000 plus 62,572 will get 1 lakh 26,572. Next 51,200 plus 45,053 will get 96,253. And the next one is 40,960 plus 24,381 will get 65,341. So we have to total these. Next, we have to calculate the tax at 50%. That is total on this 1,90,000 into 50%. So we have to calculate on this. So we'll get 95,000. In the same way, 1,57,418 into 50% will get 78,709, and 1,26,572 into 50% will get 63,286. And the next one is 26,253 into 50% will get 48,127. And the last one is 65,341 into 50% will get 32,671. Next, we have to see what is a cash outflow. Now, we have to deduct this tax from the installment amount. Now, how do you get cash outflow? Installment minus tax. So, you'll get the cash outflow. So, what is the installment in the first year? Installment remains same, that is 1,59,898. So, deduct all these. So, 1,58,898 minus 95,000 will get 64,898. That is installment amount is how much? 1,59,898. 1,59,898. Minus we have to deduct tax every year. So minus 95,000 will get 64,898. Once again for the second year, 1,59,898 minus 78,709. So we'll get 81,189. Again, installment in the third year remains same, 1,59,898 minus 63,286 will get 96,612. In the same way for fourth year also, 1,59,898 minus this tax, that is 48,126 will get 1,11,771. In the same way for the last year, 1,59,898 minus 32,671 will get 1,27,228. Now, we have to multiply it with the PV factor to get net cash outflow. So, what is the PV factor? They have already given in the question, that is 18% PV factor, 0.847, 0.718, 0.609, 0.516 and 0.437. Multiply with that. So, when you multiply this in the first year, 64,898 into 0.847 will get 54,969. In the same way for second year, 81,189 into 0.718. So we'll get 58,294, and the next one is 96,612 into 0.609 will get 58,837, and the next year is 1,11,771 into 0.516 will get 57,674, and the last year is 1,27,228 into 0.437 will get 55,599. So we have to total all this, then we'll get the total net cash outflow. So when you total it, you will get 2,85,373. So this is a total net cash outflow 2,85,373 minus 5th year salvage value. So they have given salvage value in the question. So how much? That is 1,18,000 salvage value. Here they have given 1,18,000 into 5th year PV factor. 5th year PV factor is 0.437. So what do you mean by salvage value? At the end of the year, after the life of the asset, they are going to sell that asset. So whatever the amount they are going to get, it is called as salvage value. That is after the life of the asset. If they sell the asset, so what is the value they are going to get? It is called as salvage value. Now, they have given salvage value 1,18,000 into last year PV factor, that is 0.437. So we have to deduct that. So let us see how we have done. Less 5th year salvage value, 1,18,000 into 0.437 will get 51,566. So when you get, you'll get the net cash outflow under buying option. So how much? That is 2,33,807. Now coming to the leasing option, so we have to calculate present value under leasing option also, because we have to compare buying option and leasing option. So we have to record, or we have to calculate this present value under leasing option also. So calculation of present value under tax under lease option. Now here also year remains same, 1, 2, 3, 4 and 5. So lease rental, so they have given in the question. Now go through the question. So what is the lease rental here? That is 1,20,000 for 5 years. In the sense, they are going to pay 1,20,000 each and every year for 5 years. So lease rental remains same. That is 1,20,000. Next, tax, they have given 50% tax. So calculate the tax. So 1,20,000 into 50%, that is 60,000. So for all the years, it is 60,000. That is 1,20,000 lease rental into tax rate 50%. So we'll get 60,000. Now we have to know what is a net cash outflow. That is lease rental minus tax will get net cash outflow. So here 1,20,000 minus 60,000, it is 60,000. In the same way, every year it is 60,000. Now multiply it with 18% PV factor. They have already given in the question 18% PV factor. If you see the question here, they have given 18% PV factor. So we have to multiply with this PV factor. So what is the PV factor? That is for first year it is 0.847. So 60,000 into 0.847 will get net cash outflow. How much? That is 50,820. In the same way for second year, 60,000 into 0.718 will get 43,080. Third year, 60,000 into 0.609 will get 36,540. And the next year, 60,000 into 0.516 will get 30,960. And the last year 60,000 into 0.437 will get 26,220. So in order to get the total of net cash outflow, we have to add all these items. So we'll get 1,87,620. Now what is this? Net cash flow under leasing option is 1,87,620. Now what is the amount under buying option? That is 2,33,807. So under buying option, 2,33,807. So this is under buying option. Under leasing option, it is 1,87,620. So if you compare these two, present value under leasing option is lesser. So our suggestion for the organization, that is X Limited company, is that to go for leasing option rather than buying an asset. So suggestion, leasing option is recommended since present value under leasing option is less than buying option. So what we have to do when they give the question to recommend the organization to buy or lease, so we have to calculate present value as per buying option and present value as per leasing option, and we have to compare both, which one is less, so that has to be given as a suggestion. So our suggestion is go for leasing option because the present value under leasing option is less than buying option. So buying option is not preferable. Leasing option has to be preferred. My dear students, in today's session we had solved a problem on lease financing. See you all in my next session. Till then, take care. Thank you.